Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. On the show today with me, Dr. Soumya Kanti Ghosh, the Group Chief Economic Advisor of the State Bank of India. And Soumya Kanti has just released a very interesting report, viewers, which basically, and I'm taking the news headline really here, that middle class income, threshold middle class income is set to touch 50 lakh by 2047. Welcome to the show, Dr. Ghosh. India at 100 and middle class income by at 50 lakh rupees. What does this mean? Explain this in the simplest possible terms to our viewers.
Yeah, thank you, Siddharthi, for having me on the show. I think it's a very interesting number. So the first thing is that before I take this number, I'll take a few minutes to explain that we have used actually the income tax returns data which is on the website. The tax returns for the current fiscal is still being updated and possibly to be updated fully by the March 2024, and all the returns also come in with the fine. But having said that, I think the taxpayer data is actually extremely useful in understanding what is the current level of direct taxpayers in India. To give you some idea, I think some of the myths which are in public domain in terms of not an adequate number of taxpayers, we have a narrow tax base. I think some of these are current myths. For example, the first myth is that the number of taxpayers with zero tax liability is now only at 64% and declining every year. So that's first thing. The second thing is total number of taxpayers this year with late fine could actually top around 85 million, which is basically should be 37% of the formalized labor force. So it's not 5%, it should not be taken as a percentage of population. Now, having said that, what we did is that we looked into the tax return data across various income classes, specifically those people with income where don't have to pay taxes, and progressively going from below 5 lakhs to over 5 lakhs to finally over 1 crore. Then we used an simple statistical weighted mean technique to find out what is the threshold average income for all these tax-paying individuals. And if we make the simplistic assumption that all these tax-paying individuals are actually the middle income class, quote unquote, of India, this number was 4.4 lakh 10 years back. Today, this number has gone up to 13 lakhs. 13.6% of the overall taxpayers have moved up from the low tax base to a higher tax base. That means from below 5 lakhs to over 5 lakhs and above. And at this rate, even if we make some adjustment to the dynamic weights, we find that this number could actually turn, this threshold number could turn 50 lakhs by 2047. So, and the assumptions are actually very conservative, because the number of taxpayers today has tripled in the last, in the last decade, from 300 billion to close to around 900 billion, as I just said. And at this rate, I think the threshold income should not be lower than 50 lakhs in 2047. So that's basically a jump from the current level of 3 times. So we are actually assuming that the same rate of jump continues and the tax filing also continues at the same proportion where it is currently happening.
Okay. There is another point in the report, and I am quoting from that, and you could explain to our viewers, because you have given us the basis and the data assumptions that you have gone through using income tax filing data from the government website. But there is one more bit about per capita income, present and future. And you have written that per capita income is expected to increase from rupees 2 lakh in 2023 fiscal to almost 15 lakh by 47, and this would translate into a USD iteration of $2,500 to $12,400, and I'm sure you have assumed a certain value of the exchange rate. Explain this bit to our viewers.
Yes, I think this is also a very interesting assumption, Siddharth. Currently, if you look into the data, the per capita GDP at current prices, I'm talking about current prices, around 1.9 lakhs. So, and if you take the threshold income today also, it is around 13 lakhs. So basically, what was the threshold income earlier today? So over a point of time, what we have assumed a very, I think the dollar rate of growth of Indian economy has been in dollar terms has been 9% over the last 2 decades also. And given the fact that there will be an exchange rate depreciation, which you can assuming at 1.5 to 2% per year. In fact, this after a decade or so, given the current efforts of rupee internationalization, this number, the rupee could actually start to appreciate. So even if you take a value of rupee say at 115 to 120 by 2047, the dollar value and also the gap between the middle class threshold income and the per capita income currently of the Indian population, I think this gap will reduce, and we expect that this number could be around $12,400 in dollar terms. It could be as much as $12,400 in the 2047. But there is also a catch is that if the rupee also appreciates the way we believe that it could happen maybe after a decade or so, given the current efforts of government in rupee internationalization, I think then this number could be even higher. So all in all, I think we stand to gain in terms of an economy which could be higher in terms of the GDP in US billion and also higher in terms of the per capita income in dollar billion.
Right. The third element, and there are a set of questions I have for you on the impact this kind of growth would have, is relating to workforce, where another part of your report, and viewers, this is very important, Dr. Soumya Kanti Ghosh has given us data on workforce present and future trends. Now, just like you mentioned, 1610 million in FY47, up from 1400 now, which is 1.4 billion to 1.61 billion, and the workforce is expected to increase to 725 million from 530, and the workforce share in the population will go up to 45% from almost 38. There is also a bit about how agriculture, more people are expected to move out of agriculture and get into other kinds of work related activities. Explain these findings, Dr. Ghosh.
Yeah, I think Siddharth, again, these are based on very standard assumptions. For example, if I take the agriculture share, we are assuming that the share of agriculture could be at today 42% of the workforce are in agriculture, and if you look at the World Bank data, every year this number is going down by 1%. So maybe in 2 decades time this number could be closer to 22% or 25%. So that's the first assumption. So what we are assuming is that all those population apart from the agriculture are the taxable workforce which the government could target in terms of tax mobilization. Now in terms of the population numbers, I think population numbers, if you look into the projections, there has been government reports also which keeps this number between 161 to 165, because India already has a declining fertility rate, which I mean if you look at the replacement rate. So from that point of view, I think this is the realistic assumptions about 161. This number could actually go up to 160, 164, but not more than that. On the labor force, I think we also the assumptions we went ahead, because the population, the workforce population today is defined between 15 to 64, because 15 to 64. So we took that percent of the population between 15 to 64, and also the labor force participation rate, which is then given by the UN data. The UN notes that the labor force participation rate is actually going to peak in 2040 for India and then starts to decline. So if we just use this share of the population with the labor force participation rate and with this assumption of share of agriculture declining, I think we get a number close to around 750 million in terms of the workforce. And what we call the taxable workforce, the taxable workforce is nothing but the people who are not in agriculture but outside agriculture and liable for taxation, whether they pay taxation, no taxes, or whether they're out. But this is the base on which the government can actually work in the future in terms of mobilizing taxes. That's why we were getting a figure. I mean, and if you look into our projections also, I think in initial years, this number is not increasing so much because as the economy progresses, but if you are assuming a 9% growth in dollar terms, so basically with a 2% extended depreciation, this would mean that the nominal growth rate could be around 11%, 10 to 11%, which is a highly achievable number. our economy could actually be in between 20 to 25 trillion by 2047, and all these numbers which we have calculated could be in that range only.
So viewers, this is a very interesting analysis of income tax data, and like Dr. Ghosh is pointing out, multiple conclusions. One of the points as a follow-up, Dr. Ghosh, your report says, and you explained that just now, close to 22% of the workforce is projected to be engaged in agriculture. Now, as per NSSO 2021-22, that number currently is 45.5%. Where will this significant number of people find employment? Have you been able to look through the data and suggest whether this significant shift out of agriculture will mean workforce being employed in industry, in manufacturing, services? What will happen?
See, I think, Siddharth, one point I want to just mention over here. I think before the pandemic start, this number was actually lower by 2 to 3%. Unfortunately, because of the pandemic, there was a lot of reverse migration. So this number at 45.4%. But if I take that account, and if I take account that there will not be any events of catastrophic proportion maybe in the next 2 decades or so, the data shows that at least 1% of the people move out of agriculture every year. So today number is just 45%. Today we are 23. So in the next 25 years, even if we are assuming that 20% of the number goes, the share of agriculture actually declines to 25%. So most of this employment, I think, in manufacturing is one portion which the government is trying to project. Services is one, and also because of the fact that I think there is also a lot of initiatives, self-employed initiatives, which is likely to come over, given the fact that India is also trying to very hard sell and get into the global manufacturing value chain, and also the fact that the new age technologies like digital, like artificial intelligence, like machine learning, I think these are some of the areas that one gets into. There will also be a lot of potential startups. So that could explain a large part of the shift from manufacturing, from the current agricultural share to the other activities which is for job seekers. Remember, India is not a country of all, could be of job seekers as of today, but it could be also of job givers. So my sense is that I think 25, even if you're assuming that this share goes up by goes on 1% every year, in next 25 years, I don't think a share of agriculture at 25% is an assumption which is very, very aggressive. I mean, my sense is actually a conservative assumption.
Okay, a conservative assumption. Just as an aside, before I go back to the main theme, should one be even considering or thinking about any impact on food security if such a large mass will move out of agriculture into other activities? Is that a concern to be even thought about?
No, I think it's a very interesting point. We have not explored that point of view in the report, but I think that is my sense is that within population with a larger base, I think even at 22% or even at 25%, whatever, so I think there will be enough people who will be engaged in agriculture. So my sense is that yes, that's a very relevant question, but my sense is that at least India will have an agricultural system, because where there will be some reforms possible in the next 20 to 25 years, which where unfortunately reforms has been very difficult to push through because of whatever compulsions.
Absolutely, and viewers, this is not to suggest that I am arguing for people to remain working in agriculture, which has its own challenges, but the broader point that Dr. Ghosh spoke about, that perhaps this kind of shift, tectonic shift, if I may use that word, will also mean that agriculture processes have to be modernized.
Yes.
The regulatory aspect also has to change, because food security is something that is very sensitive, but greater mechanization, greater focus on farm productivity, irrigation will take care of the challenges. Let's now come back to the main theme. This kind of growth of middle class income, the number of people in middle class and the per capita income, what kind of challenges will it exert for the state when it comes to infrastructure, when it comes to urban India, when it comes to our cities, which many of them are already creaking very, very badly. What would the government and the institutional response be required for such a middle class in India?
Yes, I think, see, at the end of the day, if you have a tax efficient, which is efficient today, which actually is, most of the income sources are now being tracked, or the way in terms of refund, also in terms of processing, also. I think what is also important that we build up the necessary infrastructure, because at the end of the day, uh, if such a large population comes to the uh, metropolitan cities, I think it will put a pressure. That's why, and this takes me to answer one more point. I think that's why we'll find that there's also a lot of development which is happening in tier 2 and tier 3 cities today. For example, for our bank, we can find today that possibly in some of the loan portfolio, the tier 2 and the tier 3 cities are actually expanding much faster today. So I think maybe in the future we can have a plan of urban infrastructure which is beyond these metropolitan cities, in tier 2 and tier 3 cities. And of course, the pandemic has taught us also to work into a hybrid mode of work. We have seen that how people have now built up homes in tier 2 and tier 3 cities and working from home, because now they're not going to office every day. And the final thing is that, as in agriculture, I think in urban infrastructure also reforms have been uh, very slow moving, again because of issues, political compulsion. So there should be some sort of price discovery also in the urban infrastructure, so as to involve the private sector in a more participative manner. Some of these states are trying to do this in terms of floating municipal bonds, but I think this has to go through in a larger scale, because at the end of the day, the urban infrastructure has to be done at the state level through the municipal corporations, and they need to have some funds for it. And until and unless you have a system of price discovery for urban sector prices, I think that is going to be some sort of a challenge for all of us.
One of the other implications of a rise in the number of taxpayers and a rise in their incomes obviously means that government revenues at all levels are going to go up significantly, and hopefully that will mean greater amount of money in the hands of various government agencies to spend. You spoke about the private sector. What kind of opportunities does this middle class, the new middle class as you call it, and their ascent present? And I am reminded, Dr. Ghosh, and you would also be reminded, 25 years ago, a lot of foreign investors came to India on the basis of a projection of the rise in the middle class in India and their income. Many of those projections did not come true. They got delayed, some did not happen, and a lot of foreign investors, private capital, had to recalibrate their operations. Looking ahead now, what kind of opportunity does this ascent of the new Indian middle class provide for the private sector?
I think in terms of the private sector, obviously if the size of the economy continues to expand like this one, the way we are currently seeing, and the rise of the middle class, and the data actually shows that 13.6% of the population in the last 10 years has moved from the no tax paying bracket to bracket which is tax payers. So that's not a small number. So we are actually assuming this number could be only 25% by 2047. So again, from that assumption also, it is a conservative one. So if you ask me what the private sector could do, they could get a large market, because most of the economies are now aging. China is one of them, Japan is one of them, and on all counts, India could become the third largest country in 2027. That is as per our projections. Also, we can see. And if that is the case, it will provide a mass market. If it provides a mass market, that will also lift the per capita population of the people. If it lifts the per capita population, it will actually act as a vicious cycle to stimulating demand. And if whenever there will be demand, there will be private players will be participating. And my sense is that if the infrastructure sector is built up, a lot of the job opportunities will revolve around that infrastructure which we are building up. And my sense is that the next couple of years could be even crucial, because I think we are already working over some of the corridors from between the big cities. And once this comes through, that could actually act as an very good example of also bringing down the logistic cost. As you know, India is a country where the logistic cost is also significantly on the higher side, and the freight movements have been mostly through railways. So if the road sector also develops the way as it is, there could be a movement from the rail from the road also. There could be price competition, prices could come down, and ultimately if the prices come down, the consumers and all of us will benefit. So I think it will be a win-win, but we need to give it some time in terms of these benefits actually coming through to the common citizen.
One quick point here, what kind of numbers are you estimating when it comes to the size of the Indian economy in the same time frame? You did mention third largest by 2027, but just some numbers, because Dr. Ghosh, you have seen there are various estimates, and hopefully if you have some numbers which you could share with us.
See, I think we had done an backstop calculation for this estimate. Our sense is that the economy size of the economy could be anywhere between 20 to 25 trillion. But that is based on an exchange rate depreciation of 1.5 to 2% every year. My sense is that this number could actually go higher if the exchange rate, and we are assuming an exchange rate of 150 to 120 by 2047. So at the current rate. So my sense is that if the economy starts to fire the way it is doing, and in that sense there could be always an upward pressure on the currency. That means the currency could actually appreciate, and if the currency appreciates, then there could be that could actually act as an enabler for us to have a size of the economy which could be far larger than some of the projections which are being currently made. We need to be conservative also in these terms of projections, because the numbers which I am saying you, that is based on the current rates of a 9% dollar rate, which basically nothing but an 11% nominal GDP growth rate, which is eminently achievable. But if we do better than that, and that is basically based on a 6.5% current growth rate. So, but if we do better than a 6.5% growth rate, at least consistently for a couple of years, I think this number could be easily be reached.
Okay. One final point. In all of this, as we speak about, an increase in practically everything, workforce, income, size of economy, there is also likely to be a rise in inflation. And this is already a concern, as you can see, with the recent spurt due to certain issues in vegetables and allied products. What will happen to prices in India in this same time frame, Dr. Ghosh?
No, I think this is a very relevant question. Unfortunately, today, if we look at the inflation numbers, we are in a paradox whereby the core inflation, which is basically an indicator of the monetary policy impact, is actually running below 5%. It is at 4.9%, while food inflation is at more than 11%, and overall headline inflation is at 7.44%. So I have never seen such a significant divergence in these two numbers in the last 10 years from when this number was started to get released. Now, having said that, I think this again talks about the importance of reforms in the agricultural sector. I think the problem today is that the farmers sometimes don't get the remuneration, even though the enam market which has been implemented by the government, if you look into the data, you'll find some interesting insights where the prices are actually higher than the MSP. But even if I take that into consideration, I think it is important that the agricultural produce is allowed to be sold in any part of the country as is being, which is not the norm today. Until and unless we allow the price discovery to happen in the agricultural sector, I think this problem will continue to happen. And also, I would like to end by saying that you are asking me the share of the agricultural sector. I think that's why there has been a lot of development in the allied activities in the last 20 years and last 10 years. And my hope is that as these allied activities get enlarged, at some point of time, there will be some correlation between the farm to fork, as we call the common trend in the rural sector, and that will be the most beneficial for all of us, because we have examples of price discovery, what it has done in the manufacturing sector. Because I know in the last 20 to 30 years, some of the prices of commodities, electronics, for example, has significantly declined, which is earlier. So let us allow this competition. Let the farmers get their returns, and if the farmers get their returns, and I am sure in 3 to 4 months down the line, you will be actually looking into tomato prices, which could be significantly lower than what is happening today. So it's actually something which you need to address it very seriously. Let us try to address this in terms of and discovery in prices and remuneration of the farmers. I think that could be the best thing to happen in the current context, so that all of us get a minimum remunerative produces for the efforts which we are making.
Before I let you go, one quick point. At this rate and with the numbers that you are projecting, by when will we be officially, as per the classification that is followed, a developed country?
I think, it's difficult to say, but if I go by the definition, I think there is a large possibility that India could hit the tag before that, much before that, what is getting anticipated. But we have to get some of the things right. Very honestly, if you ask me, I think when the pandemic started, all of us were staring at a double-digit contraction, but the resilience was remarkable. They were finally we contracted by 5.8% this year also. Take my word that the growth rate could be higher than 6.5% the RBI is projecting. And my sense is that if we are able to break this, if we are able to maintain this trend in terms of and the changes which we are trying to make it happen, I think we could hit the developed country track much earlier than what is being currently projected.
All right, Dr. Ghosh, thank you very much for joining us with detailed comments on this research report. Viewers, very good numbers, eye-opening numbers about what it would mean for incomes and the middle class, which is the bulk of our country, by 2047. Thank you very much once again. With that, it's a wrap on this episode of Easynomics. We'll be back with more. Till then, goodbye.
To talk about the Prime Minister's Independence Day address and the way forward, we're joined by one of the heavyweights of the Narendra Modi government, Commerce and Industry Minister Piyush Goyal now joins us on India Today. Piyush ji, welcome and wish you a very, very happy Independence Day. I want to start by talking about the Prime Minister's Independence Day speech and the key themes he laid out. And somewhere in the middle of it all, it seemed that the Prime Minister and the BJP taking for granted that they'll be back next year at the Red Fort celebrating yet another Independence Day and assuming that the 2024 general elections are already won.
Thank you, Rahul, and wish you and all your viewers a very happy Independence Day. I think the Prime Minister today laid down the work that he has done, that his government has done over the last 9 years. He also laid down the vision for India as we enter the Amrit Kal, the performance of the first year, and how we see India emerging as a global superpower in the next 20. Confident that the work that he has done